New restrictions. NASDAQ reportedly set to unveil new rules on initial public offerings, a move that could make it harder for certain Chinese companies to list on that stock exchange. During my exclusive interview with President Trump last week, I asked him about tougher rules for Chinese companies listed on U.S. exchanges because currently they do not follow U.S. accounting rules. Will you go one step further and force that Chinese companies have to follow accounting rules if they want to be listed on the New York Stock Exchange and the NASDAQ?
We're looking at that very strongly, but on the thrift fund, you know, it's run by the Obama appointments, right? And we said, you got to do this, and we're going to find out whether or not they're going to do it very soon. And if they're not, we're going to replace them very quickly. And we are looking at your second part of your question. We're looking at that very soon.
A lot of activity on China and the capital markets in the United States. The new report says that NASDAQ will require companies from some countries to raise $25 million in their initial offering. Mattie, this does not speak to the issue that these companies are not following U.S. accounting rules, but it's certainly making it harder or putting in more rules for IPOs from China.
That's right, Maria. And I think this is a good first step because it's not a wholesale blocking on other countries participating in the NASDAQ. What it is a requirement for capital for these companies who want to IPO. And the reason that this is going to hit some Chinese companies is because a lot of Chinese companies want to come to the United States, use these capital markets in order to increase the value of their business, and then cash out because they can't do that in China because of the rules and regulations that are there. Now, remember, there's a two-way street here. We've got a huge consumer base in China, 1.4 billion people. American companies want to be able to participate over there in their markets, but there needs to be, as you said with the president, transparency and accountability to make sure that our companies aren't the ones who are paying the price for that commerce.
Yeah, and we just saw a huge sell-off and a company suspended from the NASDAQ because of this very issue. This is Luckin Coffee. And do we have a chart of that, Rach, to show what happened with this coffee company, which was trying to be the Starbucks of China. But, of course, people did not understand what the accounting was. And here we have the stock plummeting, losing all of its value, much of its value. It's now sitting at $4.39 a share. And, of course, it has been suspended. We will take a short break. When we come back,